So if you're into crypto, you absolutely have to be watching this video until the very end. There's so much important news to be covering, a lot of charts to be covering. We have some controversial signals between the weekly time frame and the daily time frames. We have a lot to discuss in today's show. Make sure you smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into the show content. I did want to start off over here, of course, with this tweet. I'm sure all of you have seen it. If you haven't, essentially what happened on Truth Social Network, that is Trump's own social media platform, he came out saying that a U.S. crypto reserve will elevate this critical industry after years of crypto attacks by the Biden administration, which is now why suddenly the executive order on digital assets directed at the presidential group to move forward on a crypto strategic reserve that includes now XRP, Sol, and Cardano will make sure the US is the crypto capital of the world, right? We're making America great again. And consequently, we had a huge pump within the crypto markets. That was over the course of the weekend. This was announced on Sunday, and you can see Cardano up on the daily 49%. That's a 50% move over there. Massive short squeeze over here in the last 24 hours. Majority of liquidations, again, almost $1 billion, right? Another $1 billion this time. Shorts getting taken out of the market as they did short into that move. And if you're watching Friday's stream live, we're actually going through that stream with live price action, looking at the daily fair value gap over here. This was the show. If you did miss the altcoin pump, you know you got to watch this. We're looking at that key $78,690 level, and on the super low timeframes and hourly, looking for some sort of a move down into that CME gap, a little bit of a bounce, a reclaim of the fair value gap, and then we're looking to trade that long, right? So I did drop this ahead of time. Everything was dropped in the Discord while price action was hovering around here, looking for the long trade, and there it was. We got the long trade to perfection. But anyone who took that trade, this was you, right? This was you. If you took that trade, congratulations. You did make profits. So we got full profits pretty quickly on that trade. It was an absolute banger. And we outlined as well, where price would most likely find a bit of resistance. And lo and behold, that's exactly where we're at, right? Checkpoint 1, checkpoint 2. We're right at that resistance zone. This is what we're going to talk about in today's show. There's a lot of information over here. Again, smash the like button and let's get straight into it. So a big uptick over here from last week's extreme fear, now ticking up to 33 on the fear and greed. So still in the fearful zone, but nevertheless a big move up. And of course, huge rise over there in the 24-hour trading volume, now 192% up. So new market participants stepping into the market. Many people will only see this news later, and many are going to be left wondering, well, which coins could be next that Trump is going to tweet about, which is going to lead to a potential bounce. This week is absolutely wrought with massive information across the board, because Friday is going to be the day, right? Friday is going to be a huge, huge day. We've seen the US have been dropping absolute bombshells on Fridays, and then this time it was on a Sunday, right? When they came out, of course, with this tweet while traditional markets are closed. But why is Friday such a massive day, right? Well, first and foremost, we have the non-farm employment data, which is going to be coming out. We also have Fed Chair Powell speaking, but that's not the only reason. There is also going to be Trump hosting a crypto summit at the White House on the 7th of March, which basically lines up all on the same day. It's all down to Friday, right? So you really need to pay attention, have all your ducks in a row. You need to be on point when it comes to what's going to happen into the end of this week. And I want to go through all the charts we've outlined, essentially how risk has been towards the downside. Despite playing these small-term bounces, at the end of the day, we are in a downtrend, right? Lower lows and lower highs has been the name of the game, and therefore you do need to be very, very cautious. But I did also outline that it's still more likely to me that you're going to play out some sort of a right translated cycle, similar to the price cycles where price does play some sort of catch-up, but we cannot outline the warning signs. And this is why it makes it a very complicated trading environment right now, because we have a lot of conflicting signs, right? And I'm going to show you the conflicting signs, and then I'm going to leave it up to you to make your own determination and decision making for whether you want to be long or whether you want to be in cash, right? So let's start going through some of these signs, right? First and foremost, we did have, of course, the ETF flows. When we've had the highest flows ever, that has marked a major top within the market. And now we've had one of the lowest flows ever, or outflows at least, the biggest amount of outflows with the red candle over there. And the question is, was that a major low, right? Was that a major low? Because sentiment-wise, these are the signs and symptoms of what you would expect to see at a cycle top. I think the question remains is Trump announcing all of these things still yet to be priced in? And then the actual implementation of the US buying, when they actually pass it in Congress and they actually start to buy these crypto assets, would that be the top? Or is this already the top now? I don't know, right? This is what we need to go through in today's show. We have a lot to look at. If you do look at the monthly time frame, it's pretty bearish, right? The monthly time frame is bearish. You have a new swing low over here. You have the potential, and the reason I say the potential is because when it comes to Elliott wave counts, we need to wait. But you have a very, very clear 1, 2, 3, 4, and now we are in the fifth wave, right? Why do I say that? It's not completely clear yet, because this could theoretically extend further, could go into $130,000, $140,000. But if we do confirm that this is a major top and continue that downtrend, well, that would be a major top. And then at least you're calling down into this zone over here, back into the pink box around $60,000, right? So that's the first thing. The next thing that we have to go through is, of course, the bearish divergence, which is on the weekly time frame, which we already covered at length last week. If you do want more information on this, please just go back to one of the prior videos. You'll find that information over there. But why is it conflicting, right? So we have these bearish indications over here. The conflict now comes into the weekly candle. The weekly candle was undoubtedly incredibly bullish, and we said this is really the only way that the bulls' hopes remain alive, which is part of the reason why we still attempted to take that long trade in the Whale Room Discord off of those lows over there, in order to still at least catch some of the potential relief rally. And that's what you need to be asking yourself right now. Was this simply a relief rally, right? So the weekly candle is very contradictory, because that, of course, looks like a major shakeout candle, a major bottoming candle that should lead this price action to continue higher. Not only that, but you also see now price action closing well back above the 21 weekly exponential moving average, which typically speaking, as long as you're above that and it's angled towards the upside, which it currently is, you're long and strong and you continue to hold those long positions, right? We ultimately do need to look to the stock market, because I think the stock market will be one of the main drivers as to what may come next. So again, we just go through some of the risk factors over here. You are essentially putting in some lower lows over there on the QQQ. You got a new swing low within this region over here. Dow Jones is still looking okay. Lower high, but a higher low over there. NVIDIA, let's quickly have a look at one of the biggest in the space, holding above the mid-range over there. MicroStrategy getting a little bit of a bounce, but as you can see, this is absolutely nothing in comparison to where it was and where it came from, which means it's got a lot of work to do to get back up, right? At least with Bitcoin, Bitcoin has traded back into the trading range. If you view this as your horizontal, you would need to see MicroStrategy back above $300 to do the same thing that Bitcoin has done, right? So we're going to go through all of these charts over here. Coinbase as well, coming into key support. This is a major level where you do want to see Coinbase bounce. Tesla, we did take the long trade over there. Price is bouncing out of the fair value gap. So we need to see what the stock market does, right? The other thing that I'm paying a lot of attention to is the DXY, because we spoke about the potential as well for the DXY to also be in a rock and a hard place, where essentially it's on the cusp of deviating. Let's just do a quick refresher over here. Just give me a second, guys. Let's get our drawing back. There we go. It's on the cusp of deviating over here, deviating back down below the bottom of the range high. If it does, that would be great for risk on assets, great for crypto. And I would assume that leading into Friday, we're going to get the answer as to what is the most likely next move. But at the same time over here, you do also have this essentially parallel channel moving towards the downside, which is coming off of a bull flag. And if price did have to break out of this, this could really get the DXY rocketing towards the upside. And at which point you would say that these bearish divergences on Bitcoin are most likely to play out, and you're going to be going lower. I think what you can be looking at right now is you can be looking at this wick low on Bitcoin as a major invalidation, right? From this point onwards, it probably does make sense to target the 50% of the wick if you're lucky enough to even get that type of a move. There you go, target 50% of the wick over there. Let's mark out our levels on the weekly time frame, and we'll extend this line to the right-hand side. There it is. And any price action that comes back down into $86,216 probably makes sense to be still at least attempting one more opportunity at a long with a hard stop loss below this wick low over here. If you do break below this wick low over here, you can expect that Bitcoin's going to drop deep down into the $70,000 region, and possibly at that point, all the worst case scenarios do begin to play out with the bearish divergence over here, where we discussed previously. The question is, are you over here or are you over here, right? So if you do start to take out that wick low, chances are going to be more likely that you're at the second point over here, which means you'll be looking for continuation down, and that could be the start of a bear market. I think the picture will become a little bit more clear when we get to the daily time frame, which is this chart over here, right? So daily, we did say if you can reclaim back into the trading range, that is going to be a good sign. But of course, we do still have a downtrend, right? There's still a downtrend over there. There is still resistance over there. Price is backtesting now into the support level. This is going to be a significant zone where you do want to see a little bit of support found on the daily time frame. You bounced off of the 200 MA and EMA, that cluster over there, which got price moving onwards and upwards. But which way is the trend, right? Typically, you don't want to fade the trend. At the very least, I'd look to the daily time frame, which is still putting in a series of lower lows and lower highs. So if you do put in a lower high over here, this is your bearish order block that led to the breakdown, which is where you expect resistance to be found. Now, if the weekly is going to save price action, which again, we'll go back to the weekly. Why? Because this is a very bullish looking weekly candle. Then what you would expect on the daily time frame is any pullback down into that low region that does hold the support is still probably worth attempting the buy despite the downtrend over there, right? So there it is. This is what we're looking at. Price is currently putting back, as we can see. It went a little bit high over here. Let's quickly see at the 786 where that lines up. Well, exact, right? If you go in there and you line up the 786, you can see exactly to that wick, meeting the downsloping trend line, rejected off that, and price is now starting to pull back over there. So there will be profit taking that comes into play. Also, you have the high volume profile with the points of control, which we wanted to see for such a long period of time. Bulls get above, and they failed to do that. That's $96,000. And once again, rejecting from the 0.786, as well as that high volume points of control, right? But we did fulfill this lower region over here. Again, that's part of the reason why we look for the long trade off of those lows. So that's what we got over there. The 4-hour time frame over here, same thing, rejecting off of the 200 EMA, price is coming down. Now, what does it mean, right? What does it mean in the short term? I would attempt another long, right? I would attempt another long. So I'd be lining it up to see what happens at the 50% level of that massive weekly wick. I wouldn't necessarily say if it's bullish that you're going to make it all the way back down there and that you'd even want it to go all the way back down there. But for the sake of the information over here, this is going to be that 50% level. It's the orange line running across the screen, right? The next thing that I'd look at is I'd have a look at the 50 EMA on the 4-hour time frame, which is currently trending towards the upside. Let's just quickly do a refresher there so our drawings come onto the screen. There we go. So you got your 50 EMA, which is currently riding towards the upside. If you get price action coming back down into this 50, watch for the reaction into that zone. Look for an opportunity over there. And if you're looking to scale into this region over here with a hard stop loss below that candle, I think that makes a lot of sense, right? That would be the trade that I'd be looking for. To give it to you straight, quick, and immediate without beating around the bush. Stop loss below this wick low. Meaning that at that point, you would have fully engulfed this candle, which is what you don't want to see, and looking to scale into this zone over here, right? So any price action that comes into here, we'll update you in the Whale Room Discord. That's where I'd look for an opportunity, but it's a risky game because you're betting against the daily trend, which continues to remain towards the downside, right? The daily trend is still down, right? The best case scenario for the bulls is a little bit of chop around here, form a bit of a trading range, and there's a lot of things coming up on Friday, right? So we did see, if you look over here, I've told you to look as well during those periods of extreme fear at the funding rates as well for Confluence. And you can see you did get negative funding, right? You had negative funding following the dump over there, meaning people were trying to short that, and consequently the news event came out. Of course, nobody, unless you're an insider, would be able to have traded this, right? Well, for such a move, right? We did plan out. We looked for the move. We looked for a move up into that 0.6 78618 into the golden pocket over here. We went a little bit above it into the 786 over there. But I wouldn't have expected it to play out so quick, right? Even for me, this is much quicker than expected. But there were some signs, right, that there could have been a short squeeze over there as market participants came in trying to short Bitcoin following an already massive drop, right? So this has been one of the biggest candles that we've had in a single day. The other thing to outline here that's going to be important is to look at the CME chart, right? Because now we're going to have another massive gap, right? And some people think that maybe the gaps will not get filled. But we did see the gap now at $77,000 essentially getting filled. So let's quickly go onto that gap. And there it is. This will be one of the biggest gaps. Why? Because it was one of the biggest candles that we've ever seen, almost $10,000 in price. And therefore, this is why I say any price action that does come into that zone probably makes sense that you would at least attempt to take the long-sided trade over there for the potential of a bottom. This has got it at 88,730. Let's line that up with, of course, the 50% of the wick. The 50% of the wick comes in at 86. So it's about a $2,000 differential that you have. Give or take between about that $85,000 and $88,000 region is where I would expect market participants to try and step in and attempt to buy the dip, right? Now, with that being said, we do, of course, have to go through some of the altcoins, right? Why is it that Trump ultimately labeled Solana, Cardano, and XRP? Well, one way that we can speculate is that they simply just went and looked at the coins made in the USA. You can actually view this on CoinGecko, CoinMarketCap. You can go under the various different categories and you can have a look at the coins made in the USA category. And as per market cap, well, these are the highest on the list, right? XRP, Solana, other than the stable coin being USDC, you then have Cardano. So if they continue to make announcements and you move through this list over here, probably makes sense that we look at things like HBAR, Hedera, Chainlink, could look at Stellar, AVAX, Subi, right? These are some opportunities that you can go yourself and have a look at. Not only that, but we do know that also when it comes to Cardano, Charles Hoskinson is friends with Trump, or at least he's tight with them. You also have the XRP top dogs that are also tight with the US government, US Congress, and consequently that could be why some of those were listed, right? So as per the altcoin market, it's still looking pretty bleak, pretty dismal. This is still a very, very strong downtrend for ETH BTC. If you actually go back to this tweet over here from Jack, he says, "I'm literally shaking and crying right now. My entire net worth is in ETH," and ETH was not listed, right? So pretty brutal over there. ETH was still not listed, but still downtrending, trying to find a bit of a bottom over here. It does show that there would still be time for that to of course, revert. Now, I just want to very quickly touch on the daily time frame because we did speak about the potential for a Wyckoff accumulation schematic. And I told you one of the things I'd be looking for is abnormally high volume to confirm the spring phase with that deviation back into the trend, right? So you have price attempting to have deviated back into the trend over here. And we'll see if it can hold above the top of the range low. But the problem is we don't have any high volume, right? The volume has picked up, but relative to all the prior volume, there's nothing that stands out as abnormally large in comparison, right? So this is also one of the things that we need to continue to monitor over the course of this week. We'll have to continue to pay attention to this to see if Bitcoin can break up. The levels to reclaim still remain the same, right? If you do start to get daily candle closes above the breakdown level, which would be essentially $96,700, which we got very, very close to, but we haven't broken above that yet, that would be one thing that would really start to shift the momentum, right? And if you want to be extra conservative, all you have to really do is wait for about $100,000. At that point, you clear these high volume regions, the points of controls in this high volume range that Bitcoin is being caught within, right? So for those of you wondering, why do I mention all these various different scenarios, guys? Just by the way, I know there's so many different viewers over here. Some people are much older, they 65, 70 plus, and they're looking to preserve capital. This is why I give various different scenarios. For those folks, you're probably waiting for a reclaim of $100,000. You want to buy into strength. You want to buy when there's momentum. You don't want to take these risky types of trades that I've given. For the degens out there, I'm pretty specific about that where I say this is risky. This is very, very risky. If you want to take this trade, this is probably for the short-term traders. You don't want to be going in within your entire net worth at these potential fair value gap lows because you're trying to catch a falling knife, right? So I am specific with that. And I just want to be clear on the messaging over here. If you do want to dabble in these altcoins, there's still a lot of work to be done for the altcoins to change the trend, right? This would be the equivalent of trying to bottom buy on altcoins if you are looking to get in now. Safe buyers will wait for Bitcoin to clear $100,000 convincingly with multiple confirmed candle closes, and then you'd wait for altcoins to outperform. Anyways, let's have a look at some of these. Let's have a look at, we'll look at Solana, Cardano, Hedera, Chainlink, and we'll see if there's any others, right? So I'll move that up to the end over there. Let me know in the comments if there's anything that I'm missing that I do need to take a look at, right? So USDT dominance, we also have this over here. Of course, you can see price holding up in terms of the trend. It hasn't engulfed or taken out an original wick, the big move towards the upside, but you did have a rejective candle over there on the 3-day time frame, which at least is one good sign. So we'll pay attention to this over the coming days and weeks. I do again anticipate that its next major decisional move will be based around what happens over here, right? So there will be a lot of trades that are going to be coming up this week around that. Bitcoin dominance is still, for the most part, in an uptrend. You can just follow simply the yellow line. Is it putting in high lows? The answer is yes. Is it holding the fair value gap? The answer is yes. It's still holding the fair value gap. It hasn't yet broken below that. On a zoomed in approach, we did get some interesting candles where we said that, it's taking out these, right? On a closing basis, it's starting to take out this major area where we got the first big reaction. But again, for the conservatives, that's for the aggressives out there. For the conservatives, you're going to be waiting for clear altcoin outperformance with a breakdown below 58.58%, right? That's the level to clear. Total, if you look at the total cryptocurrency market cap, we do have a bearish cross over here when it comes to the EMA ribbons or the super guppy indicator. You can see it's turned red. Price pushing up, still a lower high, right? This is still a lower high. Yes, it's a promising looking bottom over here, but it's still a lower high. We need to see the total cryptocurrency market cap breaking and holding above 3.15 trillion, right? 3.15 trillion. If we go to total 2, well, total 2 is no different, right? Rejection from that breakdown area originally. Bearish cross over there. You can see it's all turning red. So there is still some work to be done over there. If you look at total 3, this is the shift that we saw happen, right? Probably because of the announcement. Now people are trying to price in what the other coins could potentially do. And we might start to see some moves over there. And total 3, which is the altcoin sector, getting back above the breakdown level, which is at least one good sign. But I would look more towards the total cryptocurrency market cap because that shows you that it's not just cards shuffling amongst friends, right? If the total cryptocurrency market cap is breaking out, then you know that new money is coming into the market as opposed to shuffles occurring from, let's say, BTC into some of the altcoins, right? So others still down, right? Still down, got a lot of work to do to break above that level. All right. So again, total cryptocurrency market cap, still promising bottom, very, very similar to Bitcoin on a weekly time frame. And therefore, same story. What I would do is I'd be targeting over here the 50% of that wick, which is going to line up. Let's just quickly, sorry guys, I don't know why my trading views need to be refreshed here the whole time, but let's quickly do that. All right, so you're going to essentially be targeting this zone over here. Let's line that up. There we go. And where is the bottom of this? Let's do that again. All right, there we go. So we got this over here, and let's grab our 50% level. All right, 50% level lines up to 2.82 trillion, which is the white line running across the screen. Total cryptocurrency market cap could theoretically still drop and be bullish. It could still drop down into this zone over here, which as a percentage is about a 6% move. So give or take, depending on what you're looking at, about a 6.8% move, 6-7%. Watch as it drops towards 2.82. If you see some buying pressure stepping in over there, that may be one of your best buying opportunities under the presumption, right? That's if this bull market is going to continue with an extended wave 5, right? If you look at the Elliott wave count, it's clear, right? Again, 1, 2, 3, 4, and this is the 5th wave. Is the 5th wave going to continue? It still could, right? It still could. So we'll keep an eye on that. All right, next. Let's go into some of these altcoins. So let's have a look at a couple of those on the list over there. First and foremost, we will go to, let's go to in this order: XRP, Solana. So XRP first. All right, XRP. Let's pull up XRP, USDT. All right, so XRP, choppy chart. Essentially, it's still range bound. You can see, let's just clean this up a little bit for you over here. You can see it does have a clear range low. I'm going to clean this up. This would be the breakout level, $4, if it did complete this move over here. But you have a really nice range low coming in at the yellow zone over here. So it did seem to hold that. You back tested 50% into that wick. You got the big move up, but theoretically you've come directly into resistance over here. If you're in and you got in earlier, I'd probably continue to hold with my major profit taking zone coming in all the way at the top over here, which is your measured move at $4.09. All right, let's go to Solana. How's Solana looking? So already down 9%. It is coming back down to test the support zone. So we'll see if that holds. It's theoretically, it did at least break back above the breakdown level, created a little bit of a higher high over there. So when it comes to Solana, I'd be observing anywhere around this 150 to 160 as a major support. We'll see if it can continue to hold up into that zone. But still a lot of work to do to fully reverse this, right? We'll go on to Cardano. Let's have a look at Cardano, which had one of the biggest moves. So ADA, here it is. This has created a massive inefficiency candle. I wouldn't be chasing this. I definitely wouldn't be buying anything over here. I'd be waiting for, possibly a major pullback or range to form. Anytime that you see an abnormally large candle like this, it works very similar to the wicks and the inefficiencies. What you want to do is you want to target the at least balance point, right? The balance point, which is going to be your mid-level. So again, targeting towards that mid-level, this means that easily Cardano could come all the way back down to about 89 cents. And theoretically, it could still play out the bullish resolution, right? So that is for Cardano. I wouldn't touch it until about 89 cents. Okay, let's see HBAR. Any movements on HBAR? What is HBAR? I have no idea. It's a old Dino coin that somehow has made it onto the US list, right? So for the most part, I'd look at this and think it looks pretty bearish with lower lows and lower highs. I'd also consider this a bearish retest, right? TA is nothing against price manipulation from the US government, unfortunately, right? If he comes out and tweets something about HBAR, it's going to rip. TA-wise, this tells me don't touch it. It's bearish retest back into the mid-range over here. It's had a pump up. You're getting a pullback. You can see the rejective candles over there. There's nothing to tell me that this would be a long trade. And if you were long on this, where would you place your stop loss? Probably the most logical place would be down there at 11 cents, which is quite far, right? So that's HBAR. We can look at Chainlink as well. Okay, let's have a look at Link USDT, and we'll go over there. Link USDT, there it is. Similar to HBAR. I mean, there's very, very little bullish things that we can say about Chainlink over here. It's just simply downtrending. It's the same level as last time. $10 to $11 would be the next major support. What I do want to remind you is when you have a look at any of these coins that the US government are talking about that you love, you can go on to CoinGecko or CoinMarketCap. You can click on currency and you can change this to BTC, right? And this will measure those coins against Bitcoin. And then you'll start to see a little bit of a different picture, right? So if we go through to something like, let's go to even Cardano, which had a 50% pump, and let's click max, which is all-time measurement of Bitcoin measured against, or Cardano measured against Bitcoin, you can see it had a massive run in 2021, and since then, it's just bled out. So this will help you to eliminate some of the noise, to not get confused when there is a sudden pump like this, but instead to be looking for proper trend reversals and a period of time where it's going to completely outperform. So, in the last 24 hours, yes, it's up 41% against Bitcoin, but over the last 1 year, it's down 6.8%, which means you would have held at a massive loss until yesterday, where now you're not at a massive loss, but you're still at a loss against what you would have got against Bitcoin, right? So since all-time low, it's up 272% against Bitcoin, but since the all-time high, it's down 85% still against Bitcoin, right? And that's going to be the same for any of these coins, even Chainlink. I was a massive fan of Chainlink. They're integrated with pretty much every single major platform and project out there. But this is what the chart looks like, right? It had a massive stellar run leading into the 2020 bull run that started off over there. And then ever since then, it just bled out. And it's just been bleeding and bleeding and bleeding, right? So even despite some speculating now that this could be one of the next ones. It's only up in the last 24 hours, 3%. Okay, so when you compare it against Bitcoin, pretty brutal. It's been pretty brutal over there. So always consider that, right? We cover all of this in 𝗲𝗏. If you do want to learn more about the top picks, I definitely have adjusted more to a trader's mindset for the rest of and the remainder of the bull run. And if you want to know the reasoning why, it's because it's getting dangerous, right? It's getting dangerous to be a long-term hodler, because you have to ask yourself, if Bitcoin does continue its behemoth run, where do you find a realistic top? And realistic tops, our first target was about $125,000. And that's not that far from here, right? Which means holding long-term portfolios at this point in time doesn't make too much sense to me. So if you do want to trade alongside us, I took 2 trades over the course of the weekend. I took I took Hype and I took Sonic. Those were 2 trades that we took with the Bitcoin trade as well, which of course is now played out. It is all dropped live in 𝗲𝗏. I don't do shows on the weekend, so the best place to get me or at least see what my thoughts are is going to be in 𝗲𝗏. And if you do want to trade these things with us, remember there is a link below as well to both 𝗲𝗏 and Bybit. Bybit offer a $30,000 sign-up bonus, and they're giving you 10% off of your trading fees if you don't have anywhere to trade, right? So all right, those are some of them. Here's your Sol BTC chart. I do want to talk about Solana since, I was pretty bullish on Solana until it started to break down. If it can reclaim back into the trading range over here, again, there's a lot of work to be done, but this would be the long-term accumulation phase. This would therefore be the manipulation phase, break back into the trading range, and then you can start to possibly look for expansion. This expansion cannot happen without altcoins outperforming and something major occurring with a massive pivot from the Fed, right? So again, guys, it's still too early when it comes to risky markets, which crypto is right now. It's better to wait for confirmation. So exactly as, yes, Tindo, the African degen, says over there. So basically, don't get too excited, right? There is some hopeful things, some optimistic things. In fact, pay high attention to what's happening right now in the markets, because if bulls cannot reclaim $100,000 off of this news, off of what Trump said, that becomes an incredible warning sign, right? That's a dangerous environment. That's where you could start to see prices cascade much, much, much lower. So excitement can be warranted if you can start to see Bitcoin for the conservatives out there reclaiming, of course, that all-important $100,000 mark. For the conservatives out there, for the more aggressive traders out there, well, you can attempt to buy the dip between about $86,000 and $88,000. 86 to 88,000. You try buy the dip if you're aggressive, and if you're somewhere in the middle, you probably just want to start to see some closing candles above about $97,000, right? So aggressives, 86 to 88, you buy the dip. Stop loss goes below the wick low. In the middle, somewhere in the middle, wait for a reclaim of $96,000 with a couple of closing candles over there, and then you start to scale in. Super conservatives, you're waiting for price to get above $100,000. So I'm talking to multiple people, multiple groups out there. I hope that's clear. I'm aggressive. I'm pretty aggressive. So I'm probably going to attempt to buy the dip between this, $86,000 to $88,000 region. But I will update you in 𝗲𝗏 for those of you that are there. That's it from me, folks. I'll catch you all on the next one. Hope you have an absolutely wonderful day, and I will see you all later. Cheers for now.